Tesla hit $414 in November 2021. Everyone holding it knew they were early. The robotaxi was months away, FSD was almost ready. You know what happened next. 65% down in 1 year. That high has never come back until late 2024. At the bottom, Elon got on an earnings call and defended the price cuts for Tesla's cars. People who have a lot of money forget how important affordability is. Now Starlink is cutting prices. One of you left this comment on my last video. The commenter said that lower prices are how Elon builds something that benefits everyone, not just shareholders. I've held Tesla since 2020. I watched it go 10x, down 80% from that peak. I never sold. That conviction is real, but it is also the most dangerous thing you can bring to a decision like this one. One number from the SpaceX S1 filing is not making the headlines. Starlink average revenue per subscriber per month, $99 in 2023, $66 in Q1 2026. There is 33% less per customer in 3 years. Starlink subscribers, 2.3 million in 2023, 10.3 million in Q1 2026, up 348% in 3 years. I want to be fair about what both numbers mean. On volume, the commenter is right. 10.3 million people have internet access that did not have before. That is real. The mission is executing. But each of those 10.3 million subscribers pays 33% less per month than subscribers paid 3 years ago. Every new market Starlink enters tends to be a lower income market. That pushes the average revenue per user further down. In 2025, Starlink made $4.4 billion in operating profit on $11.4 billion in revenue, a 39% operating margin. The business works right now. In March 2026, SpaceX offered a $39 per month entry plan, the lowest price Starlink has ever charged. Then in May 2026, 1 month before the IPO, they raised prices by $5 to $10 per month across plan tiers. They tested the floor, then they pulled it back before the investors arrived. The subscriber count goes one way. The revenue per subscriber goes the other. Both are in the S1. One made every article. The other is the number I want you to carry through the rest of this video. Starlink is not the first company to run this strategy. Growing fast, charging less, losing money. The question is what happened to the others when the market ran out of patience. In 2022, the market ran one test. Are you making money? Not growing, not expanding, not working toward a long-term vision. Just, are you profitable right now? The companies that failed that test did not fall a little. Cloudflare, real product, real customers, real growth, loss-making, down 64% in 2022. Sea Limited, real business across 3 continents, loss-making, down 89% from its 2021 peak. Snowflake, enterprise software that works, loss-making, down 64% in 2022. Snap, 300 million daily users, loss-making, down 78% in 2022. On one single earnings day, it fell 43%. Now the profitable companies in the same year. Apple, profitable, down 26%. Microsoft, profitable, down 28%. Alphabet, profitable, down 39%. Loss-making did not mean failing. It meant the market had no patience for it when conditions changed. Now the detail I want you to hold. Tesla was GAAP profitable in 2022. Elon confirmed it on that January 2023 call. $12.5 billion in net income, 17% operating margin. The company was making real money. Tesla still fell 65% in 2022. Not because the business broke, because people stopped trusting where Elon's focus was. Twitter, attention, distraction. The market treated a profitable company like a loss-making one the moment doubt started to build. SpaceX is entering the market as a loss-making company, not a profitable one. Tesla in 2022 was profitable and still fell 65% when people questioned Elon's attention. When the next market correction comes, do you think SpaceX or Tesla will fall more? Tell me below. And if this is landing differently than the coverage you have seen, hit like so it reaches someone who needs to see it before they decide. I am not telling you what happens next. I'm showing you the two reference points that belong in the same frame. Those are the historical numbers. Now let me show you what the SpaceX filing says about this company right now. SpaceX's GAAP net loss was $4.94 billion in 2025. In Q1 2026 alone, the loss was $4.28 billion. The losses are getting bigger, not smaller. I covered which segments are driving that in my last SpaceX video. Link is in the description. For this video, the one number that matters. The AI segment lost $6.4 billion in 2025, more than Starlink made in operating profit. By now, you have probably seen the $75 billion compute revenue headline, Anthropic and Google combined. On May 28, 2026, Elon posted on X about the Anthropic deal. This is a 180-day lease with 90-day notice mutual cancellation thereafter. Anthropic's exit window opens around November 2026. Google's opens after December 31st, 2026. Same 90-day notice, different dates. $75 billion is the number if neither one leaves. Two of the largest AI companies on Earth. Two different exit windows. Watch what happens after November 2026. One more gap in the S1. Starlink still does not tell investors its churn rate. How many subscribers cancel each month? With revenue per user falling 23%, that number is the one that tells you whether the growth is real. I have flagged this in previous videos. It is still not public. On S&P 500 inclusion, Evercore says SpaceX does not turn GAAP profitable until 2027 at the earliest. After that, 4 straight profitable quarters before the index can even look at them. Earliest realistic inclusion, 2028. I walked through the full breakdown in my last video. The passive fund buying most people are counting on is at least 2 years away. Loss-making at IPO, market at all-time highs, a profitability timeline that is years away. This pattern ran once before in a company Elon now owns. Here's what happened to Twitter in the decade before Elon took it private. Twitter IPO'd on November 7, 2013 at $26 a share, 230 million users, real product. The world was using it to follow elections, break news, hear from heads of state. The vision was real, everyone's real-time voice in one place. By December 26, 2013, just 7 weeks after the IPO, the stock hit $73, a company losing money at nearly 3 times its IPO price in less than 2 months. Now, here's what happened next. In 2014, the S&P 500 went up 14%. Twitter went down roughly 50% in the same year. No crash, no rate shock, no pandemic. The market was going up. Twitter was going down. Not because the product failed. The platform still exists. Elon eventually bought the whole company in October 2022, nearly a decade later at $54 a share, still below the December 2013 peak of $73. Not because the vision was wrong, because the user growth the IPO price demanded never came. The market gave it a window. When the growth numbers showed the window was closing, patience for the losses ran out. Professor Jay Ritter at the University of Florida has tracked every US IPO since 1980. In May 2026, he issued a specific warning on SpaceX. His data: companies that go public at more than 40 times their annual sales returned only 3% on average from their IPO price over the next 3 years, trailing the market by 15 percentage points. SpaceX is pricing at more than 90 times annual sales. On June 2, 2026, the S&P 500 closed above 7,600 for the first time ever. Analysis published June 3rd described it as a level the market has only reached once before in its history, the late 1990s. SpaceX is pricing its IPO into this market. The setup is not identical. It never is. The structure is. But there is something I want to be honest about before I give you the 3 signals. Morgan Housel wrote one line in his book Same as Ever that I kept coming back during this research. Everything worth pursuing comes with a little pain. The trick is not minding that it hurts. If you have held Tesla through 80% down and never sold, you will already know this. Holding through the hard years is not wrong. For some companies and some timelines, it is exactly right. After going through all of this, the question I cannot answer is whether buying at $135 today puts you at the beginning of the pain or somewhere in the middle. Those are 2 different trades, even when the ticker is the same. 3 things are worth watching right now. 1. The quarter SpaceX reports its first GAAP net income, not the calendar, the earnings. That is when the S&P 500 clock becomes real. 2. Starlink's average revenue per subscriber in Q2 and Q3 2026. SpaceX raised prices in May 2026. If the revenue per user starts going back up, the story changes. If it keeps falling after a price increase, that tells you something about who is actually signing up at these prices. 3. What happens to the Anthropic and Google contracts after their exit windows open? Anthropic's opens around November 2026. Google's opens after December 31st, 2026. 2 of the largest AI companies on Earth. 2 90-day exits. Watch whether either one uses it. The commenter who wrote this was not wrong about the vision. Elon has built this way before. Make it cheaper. Make it reach more people. Tesla cars. Starlink dishes. Eventually, Mars. In January 2023, Tesla holders were sitting on 80% losses, and his answer on the call was still, lower prices are right. The conviction never moved. The question that sits on top of all of this is not whether the conviction is real. You have seen what good vision looks like when the market does not care. The question now is, are you buying the vision or are you buying the timing? If this gave you a clear picture before you decide, hit like and subscribe. I go 3 layers deep every week.